Welcome, everyone. We shall get started. My name is Lori Berman. I am Vice President of Membership and Development for the Small Business Association of Michigan. Special thanks to the Michigan Association of CPAs for bringing us the speakers here today and bringing them back by popular demand, I might say. For those of you who were with us last week, we had many questions and answers that related to the PPP loan forgiveness application. There are many more that have already come in. I ask you today to please put your questions in the Q&A section, and we will work to get through those as we moderate those. I know there's some updates since we met last week. Ask also that you keep your questions focused to the PPP loan forgiveness. If you have other questions that are unrelated that SBAM can assist you with, send them to sbam@sbam.org. You can also send PPP and other CPA-related questions to the CARE resources. Let's say that again, CARE resources at micpa.org. All right, without further ado, let me give you another brief introduction of our presenters who are back again today. First, we have Leon Lebrecht, is a JD, a CPA, CFP, and a CFA. He's Chief Growth Officer of the Sequoia Financial Group. Leon has spent countless hours serving his community as a speaker, an author, a champion for causes like the Hazel Park Promise Zone, and he is on the board of directors for the Michigan Association of CPAs, our partnership today. Also with us is Jamie LaPiccolo. Jamie is a favorite on our SBM Daily Update as well. Jamie is a CPA, a CGMA. He's founder and managing partner of Capricorn Professional Advisors that's located in downtown Lake Orion. And Jamie is a board member of the Michigan Association of CPAs as well. And we also have Bob, and I said your last name wrong, correct me. Leon said is it Weens? Did I say it wrong again, or Weirs?
It's wine.
Wine. Still said it wrong. I have to write wine. I should be able to remember wine. We have Bob Wines here from Insights 3. Bob has extensive startup and business turnaround experience, venture capital, and triple bottom line strategy experience. He is also a licensed CPA and attorney who earned his JD from the University of Michigan. So welcome, and I will let you guys take it away. I know there's many questions coming in, and we'll let it roll. I'll turn it over to you guys. Thank you.
Great. Thanks, Lori. Jamie and Bob, good to see you. Wonderful to be with you all again today. I think I'm about ready to start contemplating methods of either self-intoxication or punishment for anything that involves PPE anymore. Because yesterday, another bill passed the House 417-1. And unfortunately, at the MICPA, I'm responsible for paying attention to all this stuff. So I'm just beside myself. We now have more versions of the law on PPP. So Jamie and Bob, if you want, I'll just go over a little bit of what's going on in DC.
Perfect.
The fact that nothing is safe while Congress is in session, apparently. Jamie, that good with you too before we get
That's all you, Leon.
Okay, thanks. So yesterday we had the Paycheck Protection Program Flexibility Act, which caused me to go do yoga. It had 35 co-sponsors, 17 Republicans sponsored it. It passed by a roll call vote, 417-1. I hear that it's got administration support, that it probably will pass some things in the Senate. It's got some things mostly that are good, but it's going to probably have the 480 or so of us on the line go, I can't believe it. So some of the things they're doing is they're extending the period out longer. So the period would be out longer. You'd still use the 8 weeks, but it would be, you'd have up to 24 weeks to use the 8-week period. They're extending the forgiveness period to December 31st or whenever the loan, 24 weeks after the loan's issued, whichever comes first. It extends to December 31st from the June 30th period that we're going to be talking about today, the time in which loans can be forgiven if you restore staffing levels, salary levels. Jamie, you and I were talking before, some of these changes are so broad that they may as well just say the whole loan's forgiven, because you could only borrow 2.5 times your monthly payroll. And obviously almost all of us can hit that, which is good, actually. This is getting us out of some of these conundrums. It maintains a forgiveness amount for companies that document their instability. That's fine in there. It extends the deadline, so people who didn't get PPPs can now still go out and get them. Although I'm starting to get a little of the shine off of this PPP after 40 changes, 40 pieces of guidance, actually now 41, I should take that back. It's starting to get a little tedious. I wonder if you guys would agree with me on that. A really important thing that will be is that it requires only 60% of the forgiven loan amounts to come from payroll. I think that's big, and it makes a big difference. It actually makes it a lot easier to get more forgiveness. It also repeals a provision in the CARES Act that bars companies from forgiving PPP loans from deferring their payroll taxes. That's a big one, and that's a definite advantage to all of us. It allows the borrowers to defer principal and interest payments on the PPP loan for the forgiven amount, as well as just the 6-month deferred period. And so if you didn't apply for forgiveness, you get 10 months after the program expires to start making the payments. And it would actually change the maturity of the loan to 5 years instead of 2 years. None of those I dislike. Why didn't you do those in the first place? So I don't want to be the Persian messenger. I don't want anybody throwing rocks at me, getting mad at me. But that's the basics, the front from DC right now. So I think we can incorporate some of those. It isn't passed yet, hasn't got past the Senate. Said the president will agree to it. Hearing from the Senate, it sounds like that's going to work too. So it appears this is going to change again. Luckily, almost all the changes for the better. It is exasperating. I think it'll be changed just as some of us are rolling into the 8-week period and have been doing this in good faith and have been bringing people back on payroll and then find out, well, we don't really need to do that altogether. So I'll go with that, give you what I call the bad news, and we'll be answering questions online. But I've got a bunch of questions that have come up, and I'm going to just start tossing them out. That's okay, Jamie and Bob?
Yeah, let's do it.
Okay. So one of our first questions, what if you have fewer employees in 2020 but use the 2019 number of employees and payroll in 2019 to qualify for PPP? You guys gave a great example last time, the FDE safe harbor. One of you want to cover that in terms of what happens on the fewer employees but use the 2019 number of employees and payroll to qualify?
Yeah, so you have a decrease, and depending on when that decrease occurred, it's going to determine whether you're in the safe harbor provisions or not. The requirement is that if, and you know, the other side too is the qualification for PPP, it doesn't really have a difference in the app, or it doesn't really come into play in the application for forgiveness. So there's 2 reference periods. So you get to elect back to either look back at your February 15th to June 30th, 2019, your full-time equivalents there, or you can look at your January 1st to February 29th full-time equivalents and then compare that to the full-time equivalents during your 8 weeks that you elect to go for the covered period. So you may, even though you think that you have a decrease, you may be wanting to look at that other, and again, don't look at your application for the PPP, look at these 2 reference periods and compare it to that. You may end up realizing that you don't have a true forgiveness or a true reduction. However, if you do have a reduction, and depending on when that reduction occurred, okay, depending on when that reduction occurred, you may fall into the safe harbor, which basically says, if I have a reduction and that reduction occurred between February 15th of 2020 and April 26th of 2020, and I've restored to the same number I had as of February 15, then there's no reduction penalty or further reduction on the FTEs. Bob, did I say that clear as mud?
I'm very opaque. It's perfect.
Okay.
No, I think you're right.
It's about as clear as mud can get. So
that's right. No, the bottom line is you're right. If you've got fewer employees than your reference periods, you've got to go under the safe harbors. Mm-hmm. That's what you need to work for. So you need to manage and make sure your layoffs are in the right time period. If they are, then you just need to make sure you restore your employees by June 30th.
Right.
Bob, somebody asked, what is the penalty for calculating differences in employees? And I think you know, we can all say that there doesn't appear to be substantial penalties in this as long as you act in good faith. Is that your guys' understanding?
That's mine. Yeah, you'd have to repay it. I mean, you're not going to get forgiveness on it, but I know of no penalty for a good faith error.
And the penalty, they may be thinking, I'm wondering if they're thinking the penalty is really, you know, what is the forgiveness reduction? And that's just a pro rata. So for example, let's say you had 10 employees during your reference period. And again, that reference is either the 2019 or the 2020 period. And there's another one for seasonal employees. Let's say you had 10, and then during your covered period, you had 7. You technically have a 70% reduction, and none of those employees, those are all true reductions and not safe harbored or anything. You have a true reduction of 30% in your forgiveness. So if that's what they're talking about penalty, that might be you would have a 30% hit against your forgiveness amount.
Yeah, but you don't get, there's no penalties.
No, there's no penalties in what we would assume the word penalty means, but I think
reduction of forgiveness. Yeah, I'd agree with you. How long does the client have to apply for forgiveness after you're able to apply? It's at the end of the period of the 8-week period, which now may be a longer period. And then you've got basically 90 days past that. It does appear we're going to get that date pushed out to 12/31. So that would be in there. There was another question came up that I think I answered. If the 6/30/2020 deadline for restoring FTE will extend it to Michigan, it'll be extended. It appears everywhere if there was a stay-at-home order. Even if you were under the 8-week period, it does appear they are going to extend that. I do laud that. I wish they would have done it earlier. I think a lot of people and a lot of our clients have already been, in good faith putting people back on payroll. Nothing's wrong with that, but they're not necessarily getting the same benefits of somebody who applied now.
Leon, you bring up a good point. I just a question for you, just really, because I've been thinking about this, and from a practical perspective, this is gonna be very interesting, because now all of a sudden, I'm assuming it's going to be an 8-week consecutive 8 weeks, right? It's not going to be a pick and choose your 8 weeks during that 24-week. It's going to be, once you pick the starting date, you've got 8 weeks from there to go. That's what I'm assuming this is going to be. This is going to get interesting as a sense of the timing of this, and our borrowers going to just decide, I'm going to wait until now December 31st or January, and then I'm going to take and start. You imagine the type of calculations you're going to have to go through and the analysis you're going to have to go through during that 24 weeks to try to find the best 8 weeks in there to maximize your forgiveness.
I'm with you, Jamie. I'm trying to figure out how they're going to do that. And I wouldn't want to be Treasury right now trying to tell us how we're going to go do that. We're going to be waiting for another set of guidance, and if there's any requirements relative to the picking that 8 weeks. If not, who knows what's going to happen, and the amount of work that you're going to have to. This is the problem I see with this is while I agree with it and allowing us to pick our time and our starting point, they should have allowed us just to pick the amount when we get to borrow the funds and just started then. Yep. But what I'm worried about is it's going to create so much of an administrative burden on these borrowers that they're going to spend more time focused on what am I going to get forgiven versus running their business. Right. And it's just that's where I'm frustrated with this law. They should have just left it alone, if you ask me. But I get why they did it. I would have just extended the deadline, and actually the way they've amended it now, I'll ask both of you. I'm digesting it. I'm sorry. I only had 24 hours to look at it. Right. I love reading statute. It's just a lot of fun. But it looks to me like this really increases the amount of forgiveness, even after I wade through all this nonsense. Yeah. It may come down to the fact that they just say, look, the loan's forgiven. I really wish they did. I talked to. Give us some documentation and your loan's forgiven. Yeah, create a minimum threshold. Say that I talked to somebody that said $250,000. Pick that number and say that anything under 250 is just automatic safe harbor and let it go. And then anybody over 250, you know what? You've got to go through these steps. At least from that perspective, the ones over 250 may be able to afford the administrative burden. These small businesses are not going to be able to afford the burden that the Treasury is going to put back on us. Right. So the AICPA successfully got the extension of the state, stay-at-home order. So that was good. With the extended stay-at-home, I think that was a good thing. I'm with you. I think I'm going to go back to the AICPA and say, let's try to get a safe harbor and just forgive everything under 250 or 350 or something. It's just pick a number and call it safe harbor. All right. Back to the question. Step back to the rules. Can you guys go on the paid or incurred rule? Can you choose payroll paid during 56 days? I think you've seen the question. And the pay dates work back, but not yes in the 56 days. So if you received the funds on April 1st, you pay the prior week's payroll on April 3rd, not in the 8-week period, but paid at the end of the period. And then the last week paid payroll is May 22nd. I know both of you guys have done this before. what, talk about a little bit about the payroll date and the APCP, the alternate payroll date, please.
Jamie, why don't you start, because we came off at completely opposites. And then we ended up with the same conclusion.
This is interesting, and leave it to Treasury to make an attempt to clear the rules and do nothing but confuse them again. So originally in the law, they stated that costs had to be incurred and paid. So we all took the assumption that it had to be, payroll had to be incurred was the days earned, and they even defined that in the rule that it was days earned and so forth. But they start out the sentence by saying, generally payroll costs are paid during the covered or incurred during the covered period. They use that or, not and. And so now all of a sudden it starts getting a lot of wheels turning of, oh, that means I can start to, even if I had payroll on day one and it was for all this time period prior to this, I can take that payroll and use that as part of the forgiveness. I challenge that thought pattern for the wages and compensation, because everywhere else that they talk about an 8-week payroll period. They talk about it in the alternative. They talk about it for employee owner compensation. So they clearly define that compensation, wages paid for compensation, is during an 8-week period. You can either choose the alternative, which is the date, the first payroll period starting after the loan is dispersed. So for example, if you had the loan was dispersed on yesterday, and your next payroll period starts on Monday, you can start the 8 weeks on Monday, and if it's biweekly, you go basically 4 payrolls out. So they've defined that as an 8-week or 50-week period. Where I think that they're talking about the paid, and this is my opinion, but it makes sense to me, where I think they're talking about the paid side of this is for those non-cash wage expenditures, the health insurance, the 401ks, the self or the unemployment insurance, because that would make more sense to me, because that then corresponds to what they said about the non-payroll costs, that basically said the non-payroll costs can be paid during the 8-week period, and it doesn't matter when they were incurred, but as long as you were paid within that, then they allowed for afterwards as well. That is kind of my compromise on this, because I still don't believe that they're going to allow people to take more than 56 days of paid compensation or compensation calculation for the forgiveness amount. And I know, Bob, you were the first one to bring this up to me, and we've had some interesting conversations on it.
Yeah, when I originally looked at it, I focused on the or. It said
Yep.
paid or incurred. So I thought, oh, well, they're just mimicking what they did for the non-payroll. Or they said, hey, if you pay it in the 8-week period, we'll include it. And they are also using, just like the non-payroll compensation or non-payroll rules, where as long as you paid the last one, your last payroll, if it ended after the covered period, but you made that payroll in this timely manner, then we'll let you include that too. So I thought, okay, they're just mimicking the non-payroll rules. But when we looked it over more, Jamie, I agree with you. I think you're going to have to look and say it's only those 56 days you're going to get, and you can't kind of double dip and grab some days prior to the covered period.
Yeah.
I'm going to do some easy ones. We got some of the harder ones, easy ones. Someone asked, are insurance premiums other than medical benefits including in operating costs? I'm thinking he's talking about, Mike is talking about forgiven costs. I think we all agree that we know medical insurance premiums. We don't think life insurance and other things constitute that, correct?
Right.
Right. We have, do I need to fill out a form to apply for forgiveness? Yes, it's on the SBA site. Mary, that's up there. I've had a lot of questions. Lori asked a question, can I pay bonuses to employees if I remain under the 15,340,385 cap? Yes, you can pay bonuses.
Yeah, but there's a twist to that. It's not just the 15,385 cap. They also said specifically in the interim final rules that you've got to make sure that when you annualize it, that payroll, you're not.
Doesn't come over 100 grand. Yeah.
Okay.
Yeah.
So you got to look at it. I can't remember what the exact number is, like 19,348 or something per week. If you divide 100,000 by 52, just make sure that the bonus isn't with your normal comp isn't pushing you above that, because the amount that is above that threshold, you're not going to have forgiven.
Right. But it's only extrapolating it for that period. You're not worried about after the period. So if you paid somebody a bonus after, it doesn't matter.
Bob, did they say that directly about bonuses, or did they say that about compensation at the per pay period basis?
They actually, in the IFR, they talk about the bonuses. Yeah, the bonuses.
Okay.
So,
Which is contrary to what they threw out in the instructions of the forgiveness.
yeah, well, you know, it's the fun. Different
Yeah.
authors.
I mean, I don't mean to, you know, obviously we want to keep people straight and narrow, but at the end of the day too, there's no requirement to, I think as long as we stay under the 15,385, you're going to be safe with that.
I think
I can still make an argument that a bonus shouldn't be part of my normal payroll anyways, and shouldn't be part of that calculation. I think I personally feel that Treasury got that wrong there.
Yeah. Let's go to Sub S. Got a lot of Sub S questions. Sub S taking a W-2, they count, are they self-employed or not self-employed? Sole owner Sub S.
They're not self-employed if they're W-2s.
They're not self-employed for the earnings from the S Corp, but they're going to be part of the employee owner calculation on the application, which is separately stated than the rest of the employees.
Yeah,
and
so they're capped, and there's a lot of questions. Are they capped at the 15,385? And the answer is yes.
They are. Yeah,
they're capped at the lesser of that number, or actual, or what was 2000 the 8-week equivalent of their 2019 compensation.
Right.
Yeah.
So they either take 850 seconds of 2019 compensation, no more than 100 grand.
Right.
Right. Yeah. So we had a lot of those owners draws. If their owners are paid for a draw, 2019 to 2020, does that count for forgiveness?
Now, the Schedule C self-employed individuals, and for the most part the partners in a partnership, they are looking at your 2019 tax return for both the application number and the forgiveness number. So it's going to be the 8-week equivalent, or divide your net income, line 31 of Schedule C, divided by 52, multiplied by 8. That is your payroll, the owner's payroll that is eligible for forgiveness. Then you add in the employees' costs, which would be their wages and their health insurance, but you would not include any. It has to be included on Schedule C. So whatever benefits and stuff are on Schedule C, you would be able to include. So that means that self-employed, and I've seen some questions come through on self-employed health insurance. They're not allowing self-employed health insurance because you never deducted it to arrive at you indirectly. It's baked into your compensation number because it's part of that line 31. If you were able to take the self-employed health insurance, technically that line 31 would be even lower than that. So you get into the same place where I think that they kind of hosed the self-employed a bit, is not allowing them to, when they get over the $100,000.
Okay, got a couple questions on documentation for utilities. You are required to document utilities that were in place on February 2020. You could do that by the invoice date or by the services rendered for the utilities. I'm assuming that would just be the invoice date in order for documentation. I think that would suffice, don't you guys?
Yeah. I
think they just want your statements from February on.
Yeah,
and
I'd use a utility statement. Here's my internet fee, here's my phone, here's my other stuff. I had it. All you're doing is proving you had it.
Yeah.
Right. And you didn't add it on after February 15th. That's all they want to look at.
They want to see that you had service during that time period.
Okay. I'm going to go back to our big questions. Please clarify how retirement matches, defined benefit, profit sharing plan amounts can be figured into forgiveness calculations. Since the profit for year is not yet known for defined benefit calculations, not paid in case of due days to do business. Plans with 3% matches are simple enough since 3 weeks is 8-week payroll. But how do you do a defined benefit or a profit sharing? And is it okay not to be paid during the following year? Bob, I think you would mention this, good faith. What is your thoughts, and what would you do on a DB? I know what I do, but I want to hear what you do.
Well, I mean, from a practical standpoint, we really aren't going to know how to calculate these until we've got, for a defined benefit or profit sharing, to the year end, because you've got to have your actual reports done in that for a DB. So I would just look at my 2019, look at the contribution rates I had made, and simply prorate them based upon the amount of comp I took in the 8-week period. Is it going to be correct? No. Is it a good faith estimate? Yes.
Jamie, what do you think?
Yeah, I think that you're going to, because the amount's so small that you can either do one of two things: is you can try to work through a calculation based on where you think things are at, but with the defined benefit plan, you're missing a lot of the actuarial information. So I like Bob's idea of just looking at your 2019 and taking basically 8 weeks equivalent of that number and using that for your, in the worst case is you've pre-funded it. And so it's going to reduce your contribution after the end of the year.
Right. Yeah, and I pay it too, obviously.
Yeah, I definitely think you need to pay it.
Yeah, definitely have to pay it. Yeah, so I think you just make a calculation. Obviously, if you have a DB plan and you've got people making more than $100,000, you'd have to extrapolate that down. Right. I just go find a nerd and a calculus Excel spreadsheet and get myself a good nerd.
Yeah, that'll look at what the contributions they received as a percentage of their compensation back in 2019, and apply that same percentage to the eligible amount. So if they're capped at 15,385, whatever that percentage is times 15,385. Again, you're not going to get it exact. And let's face it, I think people are going to have to contribute more, probably, depending on where this market goes. There's a good chance that everybody's defined benefit plan contributions are going to go up at the end of the year because of the fact that fund balances are at. Yeah. So I think you could arguably say that 2019 is a good safe harbor to use. You may be able to make an argument that you could increase it a bit, but you better have some facts to back it up. And again, the other side of this, reach out to your bank and see what they tell you, if they have any advice on that.
Well, and I said this last time we were together last week. There's going to be 4 million forgiveness applications going through process at the same time. I have a feeling a lot of them are just going to go, yep, that looks right. That looks right.
Nope. Now they're going to go through a 24-week period now.
Yeah. Now. Yeah. Thank you. Yeah. Thanks for reminding me, Jamie. I'll take alcohol for 17. We have, here's somebody who has a law firm, 3 partners in a law firm. The tax return for the firm provides each of them with a K-1. Are they self-employed under the SBA rules? Yes. Correct.
As long as they're, as long as the K-1 income is subject to which it should be, subject to self-employment tax. So,
right.
So
what about healthcare premiums? They when they did their application, they apparently put in healthcare expenses under those partners, and they took the loan out for the healthcare premiums. The person's asking, do they have to give them back? Was there a penalty to giving them back? Well, yeah, you won't get them forgiven, as we the rules appear right now, but it looks like you're going to have a 5-year 1% loan. Why not just pay it back over that time period? You don't have to pay the payments for a while. I mean, people don't understand. If you don't get it forgiven, you do have to pay it back, but not right away. Isn't that the case?
Yeah.
Right. And it was a good faith error.
Yeah.
I think a good faith error. Fine. Just
there was
keep the money and pay it back later.
Yeah. Depending on when they applied, there's potentially the risk of improper guidance at the time.
Yeah. So I'd say it was a good faith error. Pay the money back later and pay it over 5 years at 1%.
Yeah.
Or pay it off right away if you want. It doesn't matter.
Right. If they know I got 10,000 more than I should have gotten, I'm just picking a number out of the air, and they.
And it was annualized and multiplied by 2.5, so I can't believe it's going to be that big a very material number. So.
Yeah, we did have again some more things on a similar note. Recent PPP forgiveness guidance, interim final rule on loan forgiveness, indicates that retirement contributions for owner employees cannot be included in payroll for purposes of loan forgiveness. However, payroll was defined in CARES Act and earlier guidance, including retirement contribution. True, other than for sole proprietors and independent contractors. So owner employees, what's the status on owner employees on retirement and health care in their payroll costs? Can you guys come back with that and give us a clarification on that, please?
Yeah, they can. Their cash compensation's capped at 100K, but they're also allowed to pick up retirement and health care.
Yeah,
except Schedule C, right? That's
right. But those aren't if they're Schedule C, they can't. But if they're S corp,
everybody else can. So S corp partnerships can use retirement and health care.
Yes.
And Schedule C's cannot.
Yes.
Mm-hmm.
All right. That's how I read it too. Just want to make sure.
Yep.
Okay. Is there any definition of owner employee? We know a sole proprietor is an owner employee, independent contractors is an owner employee. How is everybody else? I haven't seen guidance on what an owner employee is. Is it 2.5%? Is it 5%? Is it de minimis? When I originally looked at the applications, I thought there appeared to be a 20% rule. But what do you two think on that issue? What's the definition of an owner employee by SBA?
I am telling my clients that If you did not put that person on the application as an owner, then don't put them on as an employee owner. So I would go back to your application and how you applied for it on your application. There's no guidance on that other than the simple fact that you didn't disclose them as an employee owner. So why disclose them as an employee owner on the application for forgiveness? So I would follow what I did on the application.
And that's the 20% rule. That's what I'm doing. Bob, what are you doing?
There is no definitions for it. So yeah, the 20% rule is probably the most reasonable one because that's what they're using as a threshold for doing reporting for the survey, the demographic survey. Yeah. So it's arbitrary, but that's the one I would probably latch on to. Yep.
We've had a couple other questions. A normal one we've answered quite a few times, but I want to make sure we clarify it. What components of payroll are deemed forgivable? FICA, UIA, federal taxes. What pieces of payroll do we need to omit in our forgiveness calculation? I think you use W-2 payroll, right? And that would exclude pre-tax employee healthcare retirement contributions. If the employees are making retirement contributions, that's in their gross pay. FUTA and Michigan unemployment are part of the taxes that are forgivable. FICA employer is not, correct?
Yeah. Any federal taxes are not part of the calculation.
Yeah.
In Michigan, the only tax that you're going to be allowed is going to be the state unemployment tax.
Right. Right.
And my understanding is that's got to be incurred. Well, no, it would fall under the incurred and paid because you would depending on when you incurred it, but as long as it was paid by the next due date, which would be July, in our case, July 25th for the second quarter. So I think I would take whatever UIA was allocated during the 8-week period.
Yep, I'd go with that. UIA for sure.
You know what the funny thing is now that I think about this, Leon? If they change that 24 weeks, that changes your wage look back period too.
It does, doesn't it?
Because the statute says for the quarter, the completed quarter prior to the forgiveness, the start of the forgiveness period or the covered period. So technically, if you wait till November, you're looking now at third quarter. I mean, oh Jesus. Who's got a beer? Oh, this is, but I mean, from that perspective, there's a lot of planning that could go into this because now all of a sudden you may have kept people laid off during that quarter and now all of a sudden, or, so unless they change it, I'd be interesting to see how Treasury handles that 24-month rule, because I'm sure there's certain things that Congress has not addressed relative to what the cumulative impact of that provision there is. And it'll be interesting to see how Treasury reacts to that.
Yep. Amy, why don't you real quickly just go through when you're talking about that look back, the January 1st to March 31st.
So there's a component remember there's two reductions relative to the amount you calculate the eligible forgiveness, and then there's two reductions. One is based upon, did you have a reduction in employee wages and employee to employee comparison? And did you have a reduction in full-time headcount? The reduction in employee, they look and say, what employees did you pay during this covered or alternative covered period? Whatever you paid them, now let's compare to what did you pay them at the hourly rate or salary in the first quarter. And if you had a more than a 25% decrease from what you paid them in the first quarter to so for example, if you paid them $20 in quarter one, but you dropped them down to $10, you've got more than a 25% reduction. You have a potential reduction in the amount forgiven. Now, the safe harbor rules apply with this as well, meaning if that reduction occurred during the February 15 to April 26, and you restored it by June 30th to the same rate as it was on February 15, no harm, no foul, keep going on. But if you don't restore it or the safe harbor does not apply, then you've got a potential reduction there, or you do have a reduction there. So it's interesting because the law specifically states that look back period, that first quarter, is defined as the completed quarter immediately preceding the date of the loan disbursement or the beginning of the covered period. So all of a sudden, if they push that back, then that quarter trails with it theoretically. But I'm curious to find out if Treasury is going to allow that, or if they're just going to say, because how does that change that measurement period, Bob, because February 15 is the date that they picked that you compare it to. Well,
Right.
if all of a sudden you say that I've got a decrease, do I still have to look back, or do I pick another, so this is going
I
to be
think they're
interesting.
going to have to lock it into Q1. The
Yeah,
reason,
I think at the end of the day, I think they are going to lock it into Q1. They have to. It just doesn't make sense otherwise. Sorry,
Yeah.
we're nerding it up and not answering questions.
Yeah, you guys are really nerding it up. Thanks a lot. I'm going to go to an easy one. How does the EIDL advance amount affect PPP forgiveness if the EIDL amount was not included in the loan amount? If the EIDL advance, the PPP funds were not spent on the same items, can the PPP loan be forgiven? Well, they shouldn't be spent on the same items, right?
Yep.
right.
Yeah. As I understand it, when you get the EIDL advance, 10 grand goes offsets against the PPP forgiveness.
It does.
Yeah, it's funny how it's going to work, because if you notice, it's nowhere on the application. But the way the Treasury is getting around it is, and they've issued this in the final rules on both the last two ones that they've issued, they are paid. So the backstory of how this works is you submit the application, the banks have 60 days to approve it and give it to the SBA. Assuming the SBA approves it, the SBA then pays the bank that forgiveness amount. Because remember, we borrowed from the bank, not from the SBA directly. So the SBA gives the bank that forgiveness amount, and whatever is left over is what we owe the bank back, assuming that, unless it's all forgiven, then we owe the bank nothing. The SBA has said that we're only going to pay you, Mr. Bank, the forgiveness minus any advances on that idle loan. So what's going to happen if you had a $20,000 PPP loan and you got 10 of it and you got a $10,000 idle, there's a chance that the SBA is only going to pay the bank 10 grand. And now the bank's going to come back to the borrower and say, yeah, it was all forgiven, but you got the idle and we only got paid 10 grand. We need to get paid the other 10 from somewhere, and you're it.
Yeah, you're
so
right.
That's the mechanics behind it. Because I was surprised not to see it on the application, to be honest with you.
Yeah.
But then when I read the final rules, I'm like, now I see how the mechanics of how they're going to get this money back.
Yeah, you're not going to get it forgiven because the bank's going to shut it off.
Yeah.
Be careful with some of our terminology. We're kind of interchanging the idle loan with the EEIG. The idle loan advance is
the
this
advance.
economic.
I was talking all about the advance, right?
Yeah.
Yep.
Yeah, I'm talking about the advance too.
Yeah.
Right, which is the emergency economic injury grant.
The idle loan is something totally different. That's all got to be repaid back, and
So we're talking about, I was asking about the grant. Sorry about that.
Right. Yeah.
Somebody asked if you can apply for forgiveness on PPP prior to the 56-day period. I guess so. I don't know why not. I don't know.
No, I don't think you can use cost prior to the.
No. I think the question is, can you apply for forgiveness earlier than 8 weeks?
Oh,
If you want to, if you use
assuming
all
your bank
funds.
assuming your bank is ready to receive it. I got to imagine that they're going to be about as quick to receive it as they are that they were to the application to borrow.
Right.
Sarcastic.
Jamie, do you got your form memorized? Where do you put owner employees? It's not on Schedule A. I think it's on line 9.
It's on line 9 of Schedule A.
See, now we really are nerds. When we memorize forms that you only use
line 9 Schedule A. I'm looking at it right here. Yeah, it's line 9 Schedule A is where it goes.
And just out of disclosure, I wasn't looking at it. I memorized it.
I knew it was line 9. I just wanted to make sure it was Schedule A. But yeah, it was line 9 Schedule A. Bob and I had this conversation yesterday, and we have to remember that it specifically states that employee owners do not go on that table 1, which is the worksheet to Schedule A, and that's where you list all your employees and the full-time equivalent. So keep in mind, owner employees do not qualify for the full-time equivalent test or the wage reduction test.
Which creates a really weird thing. Imagine this, that you've got 4 people in your company and they're all owner employees. So what's your FTE count? Well, it's 0. You exclude them all, which means if you look at your reference period, you probably should have to exclude them all from there also. So you'd have 0 divided by 0. You have an undefined FTE quotient reduction. So makes no sense.
That's for
give
all
that to your high
the
school
nerds
math
out there.
person.
That's right.
Give that to the high school math. Wages for employees that aren't being paid but aren't working can be included toward the loan forgiveness. Yes, we know that one. Somebody did ask why they gave us 2.5% as the loan, but only applied 8 weeks back, and it was to give that boost for the non-payroll costs.
Right. Yeah.
Well, I also think that they may be asking the fact that 2.5 months is actually 10.83 weeks. So it's not an even. It's they're comparing apples to oranges realistically. And I think just Congress assumed that the basic assumption is that 2 months is 8 weeks, and it's not.
So somebody loves your fabulous spreadsheet. They call it a fantastic spreadsheet, Jamie. I think it's a fantastic spreadsheet too. Bob and you both have come up with this great stuff. And which, if this, it's now that 71, that the House bill passed, if it goes through the Senate, I get to watch you two rip your hair out. Oh wait, Bob already did. But,
Yeah, I did.
Jamie, you kind of look
That's
like
why it's
Fiddler on
growing
the
here,
Roof.
so I can just patch it up here eventually.
So Jamie, if the players in Lake Orion do Fiddler on the Roof, I know the part you've got. I mean,
That's right.
you're looking good, dude. Obviously, we're going to update the spreadsheet. You're going to update the spreadsheet. We'll be able to get it to SBAM members, right?
Yeah, we'll probably do some sort of an update. We were debating on it because the original spreadsheet that I had done was really for planning purposes under the law. And ultimately, with the change in the way that they're calculating things and stuff, it changed that spreadsheet dramatically. And Bob has created a worksheet that I think what we'll do is, Bob and I have been working on that one. So we'll probably replace the one that I had done with the one that Bob had done. And so Bob and I will work on to continue that. What I've created is an Excel document that mimics the application for forgiveness and does a lot of the calculations for you that are already built in there. So, the combination of Bob's spreadsheet and mine will probably get you to the application at least, or to fill out most of the application. Although I'm expecting all the banks to have that application done online.
Plus, I just want to give you a heads up. I've looked at a lot of the payroll systems out there.
Yeah.
ADP, Gusto, Intuit. I looked at the one from Gusto. They have done a phenomenal job. They go through, they do all the calculations, they do all the schedules, they do the reports. They even tell you, you need to increase this person's pay by this date in order to avoid reduction. So first of all, I'd say really go back to your payroll service providers and just see what reports they've got. They might have you taken care of.
Yeah, the only thing, and that's why I didn't bother going, because we had heard that Treasury was working directly with all the major payroll providers to get the approved reports. And in fact, the application says we will accept that documentation coming from a third-party payroll provider as proof of the various tests and so forth. So we're kind of like, why do we go back and reinvent the wheel? The drawback would be is if some places don't have them ready now to do, because there needs to be some pre-planning done,
right?
To kind of see where you need to do. But again, now with this 24 weeks, who knows? It's all up in the air.
Yeah, I'm getting 24-week questions, which I'm going to say, given I've got 1 day to review this House bill and it hasn't passed yet, I'll take a pass on that till we get it. The 2 worker comp questions, and I got 2 independent contractor questions. I'm just going to put 2 worker comp questions together. Is workers comp included in payroll costs for forgivability? We've been saying that, but where is it? Is it?
I want to challenge that a bit. Is it really?
Yeah,
really
if you go back to the
health
original law and the FAQs, they had it in there.
Did they?
It's treated as part of the health insurance working comp is.
Okay.
Do you remember where on the FAQs it was, Bob? Because somebody asked that question.
I can dig it up.
Seeing it. I had it in my head, but I can't find it right now. So I thought it said it in one of the earlier FAQs.
Yeah, let me go see. While you guys are chit-chatting, I'll see if I can dig it up.
Because you're buying an insurance premium. That's the thing is the workers' comp is an insurance premium, not for health benefits. It's to pay employees that are off payroll.
Right.
And so
for injury though.
What if it's for injury? Yeah, and it's covered.
So I can see where you're getting at with this, and maybe they're gonna, I'd want to go look back at the FAQ. I originally assumed that it wasn't, but we can take a quick look at that.
It is so nominal.
Yeah,
I mean, think about it, unless you're in a high risk industry.
Yeah.
It's
but I mean, it's a legit question. So if we can find it, Bob, let's find it. Jamie, while Bob's looking, let me go to one on ICs. If I have an independent contractor, no, the question got scrolled out of here. I had two independent contractors. So 1099 employee got a PPP. They said they divided the amount by 8 weeks and paying themselves payroll each week for 8 weeks. Will the entire amount be forgiven if I'm paying the payroll for myself? The answer would be no. If you're a 1099 employee, you're using that Schedule C 31 from your 2019, right? So Diana, you use your 2019 Schedule C line 31.
Yep.
Right, Jamie?
Yep. Ultimately, you're borrowing on 10.83 weeks, and you only get to pay 8 weeks back. Or
Right.
get 8 weeks
Now,
back.
what would happen, Jamie, if somebody was an independent contractor and filed for unemployment? So let's say I was an independent contractor, filed for unemployment, got a PPP. Do they get forgiven or not?
As far as I know, yes, because they've said in the rulings that they're looking at your 2019 line 31. So is that a quirk in the law? Absolutely. But yeah, I would make an argument that you could, because there's no.
I didn't see anything that says reduce your unemployment. I don't see it anywhere in there. Do you?
No.
Bob?
Right.
Or Bob's still looking for our. Yeah.
I'm still looking. What was the question? I'm sorry, I was distracted.
Never mind. You go ahead and look.
There's nothing in there that coordinates the PPP forgiveness with unemployment. It would be the other way around, possibly. But then again, I don't think there's any coordination at the unemployment level with sole proprietor on PPP proceeds. Because so I think that's where they get screwed on certain parts. I think this is where they get a benefit on certain parts.
Okay. We only have 2 employees that have been laid off, placed on unemployment. Both are part-time, less than 30-hour employees. Our part-time employees count in the forgiveness calculation. The answer to that, Jamie, is yes, right?
Yeah.
Got to put them back in.
Yep. Yeah, because it would have been counted in the reference period. So let's take that example. Let's say you paid those 2 employees, okay, and you paid them whatever reference period they were 2 at that reference period, whether it's the 19 or the 2020, and you leave them on unemployment and don't bring them back by June 30th, you now have 0 employees compared to 2. You have 100% reduction in your employee headcount, which means you have a 100% reduction in the amount forgiven.
So you want to bring them back, like you said.
You want to bring somebody back by June.
Somebody back.
Somebody, you want to restore full-time employment. Somebody, you don't have to bring those 2 back, but you need to bring 2 people back. Because I had that with I said that in the example last week. Is I have a client that fired an employee on March 15th and didn't bring him back. Well, he's going to get a 100% reduction. I told him, go find somebody off the street and just beg them to work for you for the June 30th payroll period, and you restore your 1 back to or your FTE to 1 to get the 100%. It's going to save them $9,000 in forgiveness.
Right. And now
about a $5,000 bill.
Yeah. This now new rule may change that date, but we're still in there. What about family members? I had a couple questions on that. Can you add family members to your payroll for the FTE? You and I think that there's no prohibition, but you got to be careful.
Yeah. It's I haven't seen any guidance against the only people that there's what I call the anti-abuse rules is going to be the owners.
Right. We had somebody ask can you deduct 1099 employees that you have listed that were listed in your application? They shouldn't have been on the application, but the answer is you don't get forgiven for 1099.
You borrowed on the wrong amount, and now I'm going to throw this out here. If the bank was that, I don't want to say stupid, but if the bank was that negligent in not understanding the law at that time, you may be able to have an argument with them that you should have never let us borrow. So, but technically under the rules, no, they don't count. But maybe you throw it on there saying, hey, you screwed up, bank.
Kim asked a great question. If I receive my PPP loan on May 1st, will I have 8 weeks from that time to use up a full amount of the loan? And 75 has been used toward payroll. The answer under the rules as they are right now, yes. And as the answer of the rules as they might be, you'd only have to use 60% for payroll. But if you got your PPP loan on May 1st and you used it for the right purpose, and 75% was used toward payroll, highly likely you could get most of it forgiven or all of it forgiven. I haven't seen too many circumstances where all's forgiven. Have you, Jamie?
No, I think I really think that the employee owner compensation thing is going to throw a lot of people off, where there's going to be a small sliver potentially, unless you give more payroll. The only way that you're going to get forgiven is you're going to have to pay your employees a little bit more than what you borrowed against them on.
But you could do it. I can see it mathematically. I haven't seen any I've worked on just playing with Bob and your calculator that I can get 100%. I can get really close, but I can't.
Yeah, and part of that is because of the employee owner calculation.
Yeah, I had people under borrowed. Go ahead, Bob.
No, I've had a couple that they've hit their 100%. So
yeah.
I had one that under borrowed, so they borrowed less than they needed, and the forgiveness amount's bigger than the amount they would have gotten forgiven more. They just under borrowed.
Yeah.
Well, actually, they borrowed the max that they could. What they ended up doing is they increased the compensation of some of the non-owner employees.
Okay.
So, that pushed them above.
Yeah.
I'm going through all the different things. I cannot find anything on the workers' comp. In fact, it's funny. I'm finding one commentary who completely disagrees with me and says, no, they can't be. Now, he doesn't give any citations for it. But I've always treated that, at least mentally, as being part of your health insurance, as part of your group health insurance. And I could have sworn there was some sort of comments on that, but hey, I can't find it.
Okay, if you can't find it, I'm going to say then, as a panel, we'll say right now we can't find any evidence that you can, so don't do it.
Yeah, you're safer not to.
Patty asked a great question. Patty said, what about restaurants and other services that are still shuttered? We had 140 people. Now we have 20. We're struggling. We're seeing the PPP and all these charges are paralyzing. Patty, if this House bill, which, like I said, almost unanimously passed, 417-1, goes through the Senate, which it looks like it will, you'll get a lot longer period to go through this. You'll get a better period of forgiveness. It definitely will help you. And I think that's what you're the poster child, unfortunately, for what they're talking about. Everybody out there who's looking at these PPPs saying, what about the poor restaurants? And
it's the hospitality industry. They're killed.
yeah, I can completely empathize with you.
Yeah.
I really do. So Patty, I think the act really helps you. And I think that would be, if it does pass, it'd be good. It will make the three of us crazy, but it'll be good for you.
Yeah, in order to really, the rule is if you wanted to get forgiveness, you had to pay your employees right out of the gate immediately, regardless if they worked or not. The problem is that many businesses could have done that, but then they would have had no funds to be able to start up. And I think Congress was short-sighted, and they're trying now to make up for that short-sighted.
Yeah, they thought it was going to be over in 8 weeks.
Yeah.
When they did this, they said this will all be over in 8 weeks, and that's what we're going to do 8 weeks. I mean, I don't fault them. I fault them for execution. I don't fault them for intent. The intent was amazing.
Mm-hmm.
Yeah.
One commentator said, I'm just going to pay my PPP loan off as fast as I can. I'm with them. I agree. I kind of agree with them. I'm going to tell clients that took it, let's get out of this. We've been operating based on it. Let's use it and get out of Dodge.
Yeah. If you can get close, if you can get close to the 8 weeks immediately, then just do it and get done with it. So that way it's off the books and,
focus on your business versus on managing.
Really, that's it. It's just, I may have some clients that I have some dental clients and orthodontic clients that didn't go back until last week. So obviously, if this bill passes, we'll start that 8 week calc, and they're going to benefit from that directly. But they used it for operations, and I've got other clients that were paying people the minute they got the funds. So
yeah, and that's most of mine were doing that. So
yeah,
yeah. So Mike said, do I have to wait until 12/31/20? No, you'd probably be able to do it anytime after 6:30. In fact, Mike, I think we all agreed you could apply for forgiveness as soon as you were able to.
Yeah.
Kim asked, if I have consultants I pay monthly, can I include them in my payroll percentage consultants or not W-2? No.
I've had a few clients that are consultants that their clients have asked them to be put on a W-2. So there's some creative people out there. They've said, I'm going to putting me as their exterior CPA on their payroll for 8 weeks so that they can get that covered under the PPP. I just don't do it. It creates
I wouldn't do it.
It creates a whole different legal relationship that I would not do.
No.
Somebody said non-payroll costs do not include company contributions for an IRA. I think what Sherry's asking is if the company's paying into an employee's IRA, wouldn't that count as a retirement benefit?
Yeah. If the company's paying it, yeah.
Yeah. So that wouldn't be a non-payroll cost. That'd be a payroll cost. That'd be part that would.
I'm going to say it depends. Technically, there's no guidance that says that you're not allowed to contribute to an individual IRA. From a tax perspective anyways, it's not, I don't know if it's necessarily a deduction. If it's a SEP or something like that, then possibly, but I'm going to shy away from that because there's no mechanism to pay for an employee's IRA.
Why don't you just give it to the employee? Why don't you just give it to the employee and let them put it in the IRA if they make less than 100
Right.
grand?
So then it becomes part of their compensation.
The compensation. Yeah.
Right.
Yeah.
So I think technically they've got if they're paying the IRA versus if they're using IRA in the term in IRA, they've technically got and I don't want to say illegal, but they've got an improper, transaction basically.
As opposed to a SEP, which would be the right thing.
A SEP or a simple or something like that. Yes.
Yeah. Yao asked the 401k match is paid at the end of the year, but it counts as payroll costs. Yes, but Zhao, we all agree that you incur it for the 8-week period and pay it in the 8-week period.
Yes.
You do the match. You pay it in the 8-week period.
Yep.
Hey, Leon, Debbie is looking for some to torture herself this weekend and wanted to know what the bill number was. Yesterday.
7101.
Good for you, Debbie.
Yeah, thanks.
Although I haven't slept real well over the last, maybe I need to read this too.
Yeah, I think it's 7101. I'm almost Paycheck Protection Flexibility Act. Hold on, I'll give it to Debbie here.
That's a great name.
Yeah. Flexibility Act. Thank you. It should be called the CPA Insanity Act. Oh, it's 7010, not 7101. 7010. Gosh, I'm slipping in my old age. It's 7010. House Bill 7010. Let's see. Grab a couple more. We're running out of time here, gents, as usual.
We only going to 2 or are we going to 2:30?
I think I have to drop off at 2. I think if I drop off, I'll let you guys take over and go into your old part of this. Could you explain quickly why FICA tax for the employee or employer is not part of payroll forgiveness? Go ahead. Go ahead, you guys. I would say for employee, it's included in gross payroll, right?
Right. It is.
Yeah. So
Employer is excluded.
Employer is always excluded.
That's getting into Congress's head, and that's just a very dangerous place to be.
Yeah, but
I mean,
employees in their payroll.
It was specifically identified in the law that it wasn't. So.
Okay. You know what, guys? I am going to drop off because I have to, believe it or not, go to another webinar. But I'll leave it in your gracious hands. I'd like to thank SBAM for having us on. I'd like to thank all the participants. We're probably going to end up doing this again. So I'm going to drop off and say goodbye to everybody and have a great weekend, and everyone stays.
Thanks, Leanne.
Thanks,
Leanne,
Leanne.
for being a part of it. We appreciate it.
Lori,
Gentlemen,
how long did you have us through today?
I have it through 1 o'clock. If you'd like to go longer, that's up to you.
What, you mean 2?
Yeah, till 2 o'clock, right?
Okay.
We started at 1.
No, for us, they had till 1.
Yeah, we're way past our bedtime.
That's how
works
excited
for you.
we are.
So, I mean, I know that you guys have got your 3 o'clock briefing, and I don't want to go up to 3 o'clock. I've got stuff I've got to do. I'm willing to go another half an hour, Bob, if you're able to do it, and
Sure.
and the participants are willing to stick with us for another half an hour or so.
Sounds good. Thank you, gentlemen.
Yeah.
Appreciate it.
Jamie, why don't you just hit the non-payroll costs rules about the paid or paid and incurred, that whole thing, because there's a couple twists on that. And just, I don't know if you guys may have hit that when I was hunting on the workers' comp. Did you?
So the non-payroll cost incurred or the non-payroll cost incurred and paid, again, it's going to go back to what I talked about earlier, where originally they said it had to be incurred and paid, right? And they've changed the rule to say, as long as you've paid it within the covered period, and this is the 8 weeks, this is the non-payroll costs do not qualify for that alternative 8-week period. So as long as you've paid them or paid the bill within that 8 weeks, we're going to allow it as part of the forgiveness calculation. And then what they said is if you've incurred it towards the end of that 8 weeks, and as long as you paid it by the natural next bill date, then we're going to allow you to bring it back into and count that as part of the paid. So they've given us a little bit of, really what they've done with this is they've really helped us out in not worrying about cutoff periods and things of that nature. Now, granted, you do have to prorate the bill a little bit. So, for example, if you had 10 out of 30 days left, and so you get the bill and it only counts for 10 days of that, you got to take 1/3 of it versus the full
This is
balance, right?
If I'm paying it outside of
if I'm paying it at the end, yes, I can only still take the amount incurred during that period. It's not like, so if they bill me $30 and it covers 10 days, I'm only going to be able to take $10 of it, because that's what was related to those 10 days.
Now, this is the weird part that I came up with. Make sure I'm reading this right. Let's assume I've got 2 utility bills. I've got one for April and one for May. And my covered period starts in, let's say, June 1st. So I go ahead and I get my April and May bills and I pay them on June 1st. If you read over the rules, they're saying, well, that was paid during the covered period. So that's one time you can really go outside of the rule and say, it wasn't incurred, It was paid beforehand. We're just going to let you have it. You can use that for
Yep.
forgiveness.
Subject to bank's own interpretations. Yep.
Yeah.
I think this was one that I'm getting a lot. And you know what? I'm going to apologize right now, everybody, because Leon was going through the questions. I wasn't paying attention to him, so I don't know where we left off, where we started. So I'm going to kind of work maybe a little bit backwards and see some of the ones that I know we've got questions on. Transportation costs. This has been an interesting question because you know they all of a sudden they said utilities, and then in a couple announcements they said that utilities included transportation costs. And now all of a sudden it's got everybody thinking of what is transportation costs. And I've got my own thoughts on this, but what are your thoughts as what is qualified as transportation costs when it comes to utilities?
The only thing that I saw on that and some of the commentaries and some of the examples that they gave for the SBA was they talked about fuel costs.
Yeah.
So if you had vehicle fuel costs related directly to your business, those seem to be the transportation costs that they were picking up. I don't know what else would be included.
And I'm going to take it a step further and say that just because, and I'm going to walk through my logic on this, I'm going to say that you're going to be able to, if you are a landscaper or construction and you pay fuel into your machinery,
Your generators, your mowers.
generators and all of that, I'm going to say that that should qualify as well.
Yeah.
Because
Agreed.
what is the difference between plugging a machine in, a big CNC machine in, and using electricity that you use for your business, and somebody that uses a bulldozer? So I'm going to argue that those are going to count as utility costs as well. The one question I keep getting on some of these some are asking is well, what about the standard mileage rate? And I'm going to say no. That's not, because there's an element that standard mileage rate includes an element of fuel, maintenance, and depreciation.
Exactly.
So I think that goes beyond the definition. So,
Agreed.
and then I'm also telling people just to be careful, because there could be some questionality if you're paying it on a vehicle that is not owned by the business. Meaning a lot of owners will go out and lease their truck and have the business pay for it. I get that it's being paid for by the business, but the banks may look at it and say it's not a business asset. So just be careful with that one.
Mm-hmm. Okay.
So,
all right. Never thought about that.
Yep. Do utilities include telephone and internet? Yes, they do.
Mm-hmm.
Propane for forklifts, transportation? Yes, I think it would too.
I would. It's fuel.
I would too.
Yep.
I mean, you know what? Everybody is now that they're going to be possibly reducing these. Now all of a sudden this becomes a bigger calculation than what it was before. At the end of the day, I would, as long as it can hold water, why not try it? Especially if you're going to be, don't make it your primary reason why you're going for forgiveness. So don't focus on transportation costs as your savior to get it forgiven. But if it's going to be enough to get you over the edge, I would throw everything under the sun in there and see where it goes. Because if the banks throw certain things out, then they do. But
Jamie, that's a great point. My attitude:
rather ask for forgiveness than beg for permission.
You take all your payroll, you take all your non-payroll costs, throw them in there, and if you have a $100,000 loan, and with everything thrown in, you're at $140,000 of forgivable expenses. You can go like, hey, throw out what you want. I still have 40% buffer.
Yeah.
So that way it makes you a less tasty audit target.
Right. Yes. Yep. And also I just again, the payroll costs are going to be the low-lying fruit here.
They are.
Overall. And I think that they're going to be a good, so, and then with this new law change, I think it's going to create a lot more flexibility. And also I like the fact that now this loan becomes a 1% 5-year loan, possibly.
Possibly.
So,
right.
All right. I'm going to see. Okay. Hi, I'm an owner. Just moved. Okay. Hi, I'm the only owner and employee of an S Corp, and I'm receiving unemployment benefits. Received a PP loan a few weeks ago. What is your strategy to avoid double dipping? So you're not going to be able to be paid your wages and claim unemployment. Under the old rules or the rules that exist now, you need to. The strategy I would have, and the problem is now is they've got this caveat in the instruction, or not in the instructions, but that we can't give yourself a big bonus anymore, because I would have just said pay yourself $15,300 by the end of the 8 weeks, because that's all they're measuring, and take unemployment all the way up until that last week. But Bob, you're saying now they're measuring that $100,000 look back per pay period.
They are.
Yeah. So
Yep,
I didn't see that. I got to look back. I did not see that in those rules. But and also keep in mind that relative to owners, the most that you can get forgiven is going to be whatever 2019 compensation was as well. But the other side of this equation now is take unemployment for as long as you can, especially if they're going to push this out for 24 weeks. You get to pick the 8-week starting period for you.
Yeah, to be candid, that's a great point. If they do extend this out, you would probably want to not start your period till after July 31st, when you've completely exhausted the premium under the federal unemployment supplements. Right. Then at that point, you would start your 8-week period. But keep in mind just what Jamie said. You've got the lower of 100K or your 2019 comp. That's your
or what you actually paid yourself in 2020.
Right.
So, Rose, you asked a great question. I don't think anybody has really asked this one yet, but home office, we use utilities. Can we use the internet, etc., reimbursed to us? So if you took, and Bob, I'll let you comment on this afterwards. If you took the home office deduction on your 2019 return, and it included the use of internet or if you deducted internet on your 2019, whether it's through the home office or like a lot of my clients, we put it on as another deduction and don't put it as part of the home office calculation, then yes, you would be able to use that is in your forgiveness calculation. However, if it did not exist on your 2019 Schedule C, it's not allowed.
Okay, I see where you're coming from. That's giving you the support. You're saying basically it got subtracted in 19, so you can include it now.
They basically have said in not the FAQ, but the final ruling or the interim final ruling, that the expenses have to exist on your 2019 return. So that's their proof that the expense was incurred by the February 15. Right. Because they have no other way to measure it.
Let me ask you this one. Let's assume you've got an S corporation sitting out there. You've got 3 or 4 owner employees. They typically have gone into the office to do their work. Now they have to work at home. So what they're doing is they're submitting under expense reports their internet for home, because they all have to use that now. I've been arguing at that point in time simply because that's a transition they've had to do, that they can treat that as part of the utilities, but they need to separately document it, and they want it in iPad, and they have to include it in their expense reports, and then we submit that as part of the utility costs.
Where your caveat on that is did the obligation exist as of February 15?
True. That's a good point. You would have to have something showing that this service was incurred before February 15th. The problem you're going to have also, very candid, if the bank does look at it, they're going to say, instead of going to XYZ Inc. at the billing, it's going to Bob Wines or, Jamie LaPiccolo. And you're going, well, yeah, but, I had to get reimbursed. You could lose it, I thought, mainly because they're going to say, this wasn't charged to the entity.
Right. And it depends on if you have an accountable or a non-accountable plan. And that's getting into a little bit more technical tax, I think, because that determines how it's treated.
Yep.
So we talked about that. Cell phones in the name of the business. Yes, I would include that as telephone.
Yep.
I was told by my accountant that we need not to do the home office. We are an S corp now. So the reason probably for that one is technically, I was told by my accountant that we could not do the home office. S corps aren't allowed to do the home office anyway. So I think that's the reason why. It's not on the individual return. It would be on whatever's on the S corp return. So I guess, Rose, I'm not sure where that question's coming from, but we could even maybe send me an email or something, and we can talk a little bit different about that. But I don't know where they're coming from on that. So we are a C corp and listed 24 employees, which included 2 50/50 owners. Are their wages no longer considered in our calculation? They don't distinguish between S corp and C corp. So I'm assuming that a C corp owner is an employee and owns stock is included in that calculation of employees, included in that definition of employee owner.
I would agree. It doesn't mean we exclude their pay. They're still included in the pay for what's forgivable. It simply means that we can cut their pay if we want, with impunity.
Yeah. It means that you've got 22 employees for the look back period. If you had 24 and included the 2, you technically have 24 for the full-time equivalent, but their wages of the 2 owners go on line 9, not on line 1 of the Schedule A.
And you can cut their pay as much as you want, not have to worry about a reduction.
Right. Other than the fact that you don't have that money, you borrowed on that money and you don't have it, you
didn't spend it. Yeah.
Right. Okay. Do vehicle lease payments qualify as rent and other costs for the PPP loan forgiveness?
Nothing to indicate that they don't.
They clarify that they allow real and personal property lease payments as long as the lease, I'm going to make an argument here that as long as the lease is in the company name.
I would agree with you there.
I think if it's in the individual's name, I think it may be a little bit harder. You may have to go a little bit of extra hoops to prove that it's a business expense. So, and that it existed by to the business, it existed by February 15.
I would agree.
So, okay. LLC taxed as a sole proprietor. I have most bills in the name of the company, but my cell phone, including the line I have listed as my primary business number, have always been in my personal name. They were deducted on the 2019 Schedule C. Can they qualify for forgiveness? That's a toughie. I would go for it.
I would too.
I would go for it. And
you included them on your Schedule C. You've done it consistently, and it's your business phone number.
You may just have to go through a couple extra hoops with the bank to prove that it's a bit true business expense.
You know what you could simply do? You could do a screenshot of your website or a business card, attach it to the statement that you've got, and say, look, this is the business phone number. You can see it on my website. You can see my business card. Yeah. I just paid it personally. I never transferred it over. Yeah.
And the only issue that if you've got other people's, other family members on there, then I think you're going to be limited just to the one that's related to yours.
Right. So, I agree.
Kelly, copier leases too. Yes, I would include copier leases, but you may have to limit that if you've got any prepaid maintenance in there. So you may have to look at just the true equipment cost. I am the owner and W-2 employee as well. Am I eligible for forgiveness? Yes. As long as you've paid W-2 wages and you're eligible up to the various limitations as an owner. Can S-Corp 100% owner take health insurance and retirement plans for the owner during the covered period over and above the 15,385? And I think we've all agreed that of an S corporation, they get the health and retirement associated with that during that covered period above and beyond their compensation.
Yep.
Yeah. Okay. Owner of a single member LLC, 3 employees on payroll. I am not on payroll, which you wouldn't be because you're Schedule C. Included in my 2019 income Schedule C on the included my 2019 income from Schedule C on my application. Is my compensation during the 8-week period forgiven? Do I need to go on payroll to receive? We've kind of talked about this before, and it's your forgiveness is defined by your 2019 Schedule C already. It's 8-week equivalent of whatever that line 31 is. So if that line 31 was up to the $100,000 equivalent, so if that number was 130,000, you would use basically 15,385. So that is your payroll cost, and then you add in the employee's payroll cost on top of that number plus your rent and utilities.
Yep, and yours is going to go on that line 9.
Yeah. Prepaid auto lease in the name of the company. Can I use the monthly expense write-off as part of the loan forgivable?
Prepaid auto lease? No.
Yeah, it was not paid.
It wasn't paid during the covered period.
Yeah. Or paid after it was incurred. It was already been paid.
If it was incurred in the covered period and you paid it when it was due, its normal due date after the covered period, you get it, but prepaid, no. It's like prepaid rent. You can't do it.
Yeah. And I'm going to encourage, if somebody really I'm going to tell you right now, if we haven't answered your question and you really want to get it answered, I hate to tell you this, resubmit it, because I'm just kind of going through the most recent as we go through this. So,
or even better, just call Leon. We'll give you a cell number.
Yeah, exactly. We'll give Leon we've got about 15 minutes left.
He loves to be called, especially between 2 and 3 in the morning.
Yeah, exactly.
That's really when you want to talk to him.
I'm trying to go through the last half, the last bit of these. So again, if you really feel that you need to know your answer and you haven't got it, please do. Please just resubmit it so that way I can see it. I don't know where Leon left off, so I apologize for that. Can you take non-payroll costs on for the forgiveness application, if you do not check the box on your original application, yes, I don't see where there's anything that you had to declare your non-payroll costs. I think that was more for statistical purposes of how people were going to use the loan. Can our website platform costs be part of utilities I prepay 3 years in advance? First of
No.
all, you got a prepayment, and second of all, your website costs don't count. Bob? Yeah.
I agree. Yeah.
Okay. Sorry, I'm not asking you these. Some of these I'm just going through because some of these are pretty straightforward answers. We have an LLC that owns the building, but our corporation pays the maintenance and we categorize that as rent. Will we be able to forgive that as rent, or only the interest, since technically the mortgage payment that we make up to the bank for the LLC? It's a great question. Bob, I'll let you take a stab at it.
Well, first of all, you don't have a lease. Since you don't have a lease, you don't have rent.
I think that
So I would think you're dead in the water just there.
Yeah. So my advice to you is find a lease real quick.
Dated February 5th.
Unfortunately, we're recording this, so I can't
Well,
deny
no,
it
the point
later,
is,
right?
if you've always had an effective lease and you're making it
Right.
effective as of, but the problem you're going to run into is you don't have a lease that's effective and binding as of February 15th. So I'd say,
Yeah.
I hate, you've lost it.
Well, and they don't say whether they have the lease or not, but if assuming that you have a formal lease in place
Mm-hmm.
that includes February, shows that it was in place by February 15,
Mm-hmm.
then yes, it would be. I don't think they're looking beyond the related. At the end of the day, and I think I want to go to the bigger point on this, I don't think they're looking beyond the related party rules and looking at the underlying. They're not forcing you to consolidate the rental company into the main business where you would be left with mortgage payments and interest expense.
Well, I'm assuming in that example, the LLC is outside of the corporation,
Mhm.
correct? Okay. If that's it, now you could argue, yeah, you could do that if it were, an unrelated or even a related third party. You can do that.
Yeah.
Now you can have a verbal lease. It's not enforceable under Michigan law, but you could have a verbal lease. So you would need to document that beforehand and say, we've entered into this lease as of January 1st, 2017. We are now, that's the effective date of this lease, and here's the terms of it. And as long as that reflects what you've actually done, then I'd say you've got an arguable position because you've documented and you've always lived by it. But understand, it could be challenged. And if you don't have that written, I think you're going to have a problem.
Yeah, I think that a lot of, and this is an interesting question because I have a lot of clients that you have an operating entity and a real estate entity, and they're
Sure.
paying lease. And I've advised them to, at a wink and a nod, you have a lease, right? That is dated prior to February 15th, 2020, right? You have one. And so again, and typically they're related parties. So backdating a lease or making an effective date to some date
Don't
prior
backdate it. Just sign it, but just say it's effective and just say
No,
we've
if-
always
right.
done it. And if
And
everyone's looking to say
backdate's not the right proper word, but
Yeah.
making it effective, I think you could go that route.
Yeah.
Okay, so let's see here. Truck payments and insurance, vehicles owned by the company. No, they wouldn't be, because interest on non-mortgage debt doesn't count, and insurance never did.
No,
So,
right.
no, I
Except
don't
health
think-
insurance. It's part
Right.
of payroll. Yeah.
Amy, I think we kind of addressed your question when we said, she asks, we are an S Corp and always work from home. We pay some employees rent in their check separate from their normal payroll. Is this forgivable? Unless there's an agreement relative to that rent, I don't think it would be.
Right. But if they're picking, is that part of their W-2 wages, the quote unquote rent? If it is, it's just part of their comp.
Yeah.
And you're done. It's just, you don't even worry about it. Just got
Yeah,
buried
but
in
I
the
think
comp.
what they do is they write them a separate check, and technically the employees need to be picking it up as income on their personal return. So
Yeah.
the best way to
Yeah.
do it would probably have ran it through payroll anyways, but it's not subject to, I guess you could argue, not subject to self-employment, which we're getting way off course.
Yeah, we are. Okay.
Can an S Corp reimburse Medicare health insurance be considered health insurance? That's an interesting question, because at one point in time, the S corporations could not pay for somebody's Medicaid or Medicare under the Obama rules. And I haven't studied up on this in a while, so I don't know if that's still an allowed transaction anymore or not, but I think that it could be, I would certainly consider it as long as as long as you can properly document it was for an employee and that you're consistent among all the other employees. So because they do say group health insurance.
It's group health, yeah.
Yeah,
I would
so
throw it in there.
And Medicare can be considered part of the group health.
One of the biggest group health care plans in the world.
Yeah. Are expenses forgiven under the PP loan going to be deductible on corporate tax returns? I did not see that in the act. I don't know if that's part of that, if they were talking about that, but I didn't see that in the act. As it stands now, no. But there's talk of allowing it to be deductible. What impact will the same thing, what will the impact of PPP forgiveness on subchapter S owners to 2020 taxes do? Again, the amount that is forgiven and will not be deductible expenses, but you had the income. So it should end up playing out as a zero impact, other than to where I'm telling people that the impact is going to be is it's going to increase your taxable income more than you would have normally expected. Because you had, if you think that everything was going to be the same for 2020 as 2019, you're going to be mistaken, because you're going to have a higher taxable income because of the fact that you have non-forgivable, or you have forgivable expenses that are no longer deductible. So you're going to, by nature, just have a higher taxable income, but you also receive more cash. So that's the way I look at that. But it is going to have a bit of it's kind of a circular calculation here. I've been paying rent for a storage pole barn for about 10 years plus, but don't have a lease agreement. Would this qualify as a lease? It would qualify as a rent lease, but I don't think it's going to be forgiven because you can't prove that it was in effect by February 15. So, and you don't have an obligation for it. So, I mean, the banks, if you can show the history and maybe the reoccurring payments, then you might be able to, but you may want to try to get a lease or some sort of statement from the landlord. 2019 retirement plans, which haven't been paid yet due to an extension, forgiven. That paid during the 8 weeks.
No, but this is, again, that you're talking about payroll. Payroll's got to be incurred. It wasn't incurred.
Yeah, I don't think it will. I don't think it'd be allowed. All right, we've talked about that one. And then we just talked, I'm still confused on if the payroll needs to be incurred and paid during the 8 weeks. My payroll has a 1 week lag for my payroll company. Example, my pay period 2/15 and is paid on the 22nd. And if it has to be paid and incurred during the 8 weeks, I would only get 3 payrolls in during the covered period, because the last payroll pay would be after the 8 week period. Is that correct? You want to take it, or you want me to, Bob?
Sure, it's got to be incurred to start with. And then as long as it's paid during the 8 week period, it's the portion that was incurred, you can pick up. If it's your payroll at the end, if you can pick up that at your last payroll cycle, which will end, let's say, after your covered period, then you prorate that one and you get to forgive the amount that was incurred during the covered period. So if your last payroll period was bi-weekly and 1 week of it was in the covered period and 1 week was outside of the covered period, then you'd pick up 5 days as part of the covered period forgiveness amount. Does that make sense?
Or you could elect to do the alternative payroll covered period and start your payroll on that start your covered period beginning May 2nd, and it ends 8 weeks later, which would fall in your natural cycle. Now, granted, I understand that you're going to have, as long as you pay that last payroll before the next pay cycle, you're going to be fine. So yes, you would be able to get all 8 weeks in without having to do anything funny. If you start with May 2nd and just count the next 4 payrolls. Even though that last payroll is paid outside of the 8 weeks, that is allowed to bring that payroll back in.
Yep, you don't have to worry about that.
Right.
Agreed. Just remember, everyone, that the alternative payroll rules, those only apply if you're bi-weekly or more frequent. So if you're semi-monthly, you can't use them.
Right. And we're going to try to get through a few more here. And it's bad because I'm reading it and just saying, well, let's just answer it now. And it probably is skipping some of the important ones here. But if payroll is paid monthly, is the date used when paid for that month or the prior month, i.e. May 1st through May 31st, paid June 2nd, what date to use?
You're using, that's May period. It's May payroll.
I think it depends. It's going to be based on when you're going to be able to get 8 weeks no matter what.
Right.
I think it's just a matter of, you can't use the alternative, so you're going to use the payroll earned effectively with your disbursement date and then go 8 weeks out. Because even though you pay that last payroll, let's say it's going to cover some of June and you pay it in July and your loan ended at June 30th, let's say, and you don't pay that till the end of July, you're going to still be able to get that because you've paid that within the natural payroll cycle before the next pay date. So you're going to, either way, I think the best way to put this is, no matter what your payroll period is, you are going to be able to, there are ways for you to get your 56 days or your 8 weeks of payroll. It's just a matter of how you slice to get there. You may have to do some prorations or look at specific days or whatever, but you're going to get your 8 weeks no matter what, regardless, as long as you pay it in the normal. If you pay your payroll in the normal payroll cycles and at the normal payroll times, and you don't skip one or you don't defer or anything like that, you are going to get your 8 weeks of payroll. Is the best way to do that.
Yep. Just allocate the ones that are incurred within those
Right.
normal cycles.
Right. All right. If my business moved on April 1st, lease was in place January 1st, but the building wasn't finished till March, have been paying rent and the lease in place prior to the location for 20 years. Can I claim the current cost at the new location?
That's an interesting one. So they're transitioning.
That's why I read it.
Yeah, I would argue yes, because what you're doing is you're meeting the intention of the act. What they didn't want to have happen was suddenly I added on a new facility or I added on new equipment, and now I'm going to use the PPP loan for that. But if you're basically saying my existing facility, that lease terminated on March 1st, and I had to switch over because I couldn't be in the old facility, I think you need to complete the clear intent of the act. It's just a continuation effectively.
The law says obligations existed. So you had an obligation prior to, so February 15th. So I think it does count. Okay, what does it mean to bring people back by 6:30? Bring them back on payroll 6:29? I think that from my understanding and what I'm going to say is that they have to be included in whatever payroll includes June 30th. So whatever that payroll period is that includes June 30th, you better have restored to either full wages, full hourly wages, or FTE to count.
Yep, and they better be running hours at the full time and at their full wages by June 30th. So if you said, well, you know what, that payroll is due on July 7th, I'm bringing Bob back on July 4th, and because I want him to work on the 4th of July, doesn't work. Yeah, you've got it in the pay period, but I wasn't brought back by June 30th.
Yeah. So I think we're going to end on this one because we're coming close, and we're going to end on a CPA asking the question. I think it's a CPA. So can a CPA firm be considered seasonal for the FTE safe harbor after tax season is complete? It's a natural that hours decrease, so it's about impossible to meet the 120 to 229.20 or the 215 to 630.19 FTE. Can we use seasonal from May 1st to 9/15 for the chosen reference period?
Oh, I'm going to have to defer to you. I find that I've not ever thought of the firm as seasonal. I'm that one might be a little bit hard.
I would love to be seasonal. I'm busy all year round, right? Amy, that's a great question, and you bring up a logical point. I think it's going to be a case-by-case scenario. I think it really is going to be case-by-case as the sense of, I look at seasonal be landscapers where you go from virtually no employees to a whole bunch of employees and back down again. So I think it's going to be dependent on the type of decrease that you experience between tax season and non-tax season.
Yeah.
If you go from a staff of 10 and drop down to a staff of 1, I could make an argument that you're seasonal.
Yeah, you're a tax prep service then.
Right. If you go from 10 to 8 because you let go a couple part-time people or whatever, I don't think you're gonna be able to qualify for it. So keep in mind the other side of the equation is trying to think this through. Now, where you may benefit from this, Amy, is under the extension of the new law, because you're going to be able then to use the measurement. Well, No, she wouldn't. She would be able to, yeah. That's an interesting question. I think that you can try. The other side of this too is, did you apply for seasonal when you applied for the loan? Because I'm going to go back to the way you applied for it on the loan. If you didn't apply for seasonality as the calculation of your loan, your loan proceeds, then you're going to have a hard time arguing that you're seasonal for the forgiveness side. So
I'd agree.
So yeah. We are at 2:30 exactly, and we had 276 questions. I don't know, 290 participants that still stayed on. So about a question for everybody. I don't, are there ways to get copies of the questions that they've submitted, Lori?
Yes, actually, there is a feature that I can go in and print off all of the questions. I don't think I can tell you who they're attributed to, but we could do an FAQ for the questions that didn't get answered. We could post those along with a recording.
So I stopped at the one that said, can a CPA firm be considered seasonal? So there's probably about,
Okay.
oh yeah, a lot after that. And some of these we may, you know, we may we'll try to answer in an FAQ and either give them to you to distribute out and maybe look to consolidate them.
And I believe that the teams from both the Michigan Association of CPAs and SBAM were talking about doing an FAQ that we
Yeah,
could
I
share
think
back
what we were going to do is
Yeah.
and if we can get a full printout of all of this, that would be great, because I believe what we were talking about was taking this information, trying to consolidate it to the most common questions, and doing a full FAQ on this. I know that's what we talked about at the MICPA.
Yeah.
So yeah, we'll do that. And
Well, I think this confirms there's a need, and as it keeps changing, you guys are getting great reviews. So thank you for doing it. I know that it challenges because some of these things keep changing and they haven't been defined yet. But I appreciate the brain power of you working through these issues with our members, and we all appreciate it as well. So let's make that a follow-up plan.
I mean, I could go on for another couple hours, but I think that everybody would get bored. But you know,
I know
it's enjoyable to do, and you know what? It's important for everybody to get these questions, and so. You know, look for us if you have any questions. Reach out to the various places. And some of them come directly to myself or Bob, and so we'll be happy to answer what we can.
And I'll give you those emails again too, folks. The CARES resources, CARES resources at micpa.org. I know that's the one helpline, and we will do an FAQ then for the things that we didn't get answered. Thank you so much. Continue to send your other questions to sbam@sbam.org, and we'll field those as well.
And I'd like to say we're almost through this, but I don't think we are.
I think we are. Something else happens, and I understand there may be other financial features of the CARES Act that might help folks as well, and maybe we can get those rolled out next week too. So, all right, thank you. I hope you do get some time off this weekend and just get time away from all the questions. All right.
Thank you, everybody, and have a great, stay safe, have a great weekend.
Thank you.
All right.
Take care. Bye now.
Bye, Laurie. Bye, Jamie.
Bye.